Hi everyone, welcome back to my channel. Today I will be reviewing the positions in my Roth IRA account as of the 14th of July 2023. So in my Roth IRA account, I am working on the beat SPY strategy. Essentially, I'm trying to see if I can beat the returns of SPY by selling SPY covered calls. So I have 100 shares of SPY in my account, and I keep selling covered calls one contract at a time. I started the strategy on the 31st of January, and my goal is to gain additional 6 to 10% in 11 months from selling the covered calls. So at some point, my maximum profit was about 3%, which was pretty good. Unfortunately, the last few weeks are not going that well. So the profit is now only about 1%. So, and this is because the market is going up very quickly and in bursts, kind of. But I'll talk about that a little later. And I'm using any leftover cash in the account to buy high dividend stocks, Starwood, Rhythm. That was not going very well at the beginning of the year because of the banking crisis and stuff, but now it's actually paying off. But I'll be mostly ignoring this because it's not relevant to our campaign. So as I said, I started with 100 shares of SPY and I sold one covered call, and it expires worthless. It expired worthless, a few weeks later, and essentially I keep covering the calls and selling new ones over and over. I also got some dividend, about 0.365 of SPY share. And finally, a month ago, I was not monitoring the account closely enough. So a day before expiration, I got assigned a 432 call. So I was forced to sold my 100 SPY shares at the 432 price. And then in order to continue my campaign, I had to buy the shares back at the price of 440. And at the same time, I sold the covered call. So that was the last update I did essentially. So on the 16th of June, I had again the same position, long 100 shares or a little more than 100 shares of SPY and short one covered call. So let's see how we did. So here you can see that Thursday, the market jumped up quite a bit in one day. And really, our strike price was 432, and the market reached as high as 442, or even I think 443. So that's like 2.5%, over 2% essentially above our strike price. And since it was only one day before expiration, the time value of the option was really, really small, and that was better for the market makers to assign the calls to me and force me to sell the calls at 432. Also, there was a dividend. SPY Friday was a SPY ex dividend day, so whoever buys the shares on Thursday will get the dividend. So that was kind of double whammy. Uh, this the 4 weeks ago did not go very well. So anyway, I started again the position or continued the position, and my strike price was 440. And you can see the market actually did quite well for us. So it was going down, 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 and kind of stayed below 440, which was awesome. And in fact, like if I didn't buy the shares here, it would have been better for me to wait a few more days and even buy it back at the same price that I sold it for, right? So SPY went below 432. Unfortunately, that would mean timing the market. I had no idea that SPY was going down, right? So if I knew, of course, I would have waited. But anyway, so SPY stayed below our strike price for 3 weeks. Unfortunately, just the last week, it started going up and quite significantly. You can see it went from like 438 to all the way to 450, over 450. So it went up about 3% in a week, which is a very quick move. and quick moves up are not good for covered calls. So as you can imagine, I actually monitored this time the position very closely. And here on Thursday, uh, I realized that there is very little time value left. So I decided to roll the position on Thursday. And really, there was no opportunity to roll earlier. The options were very close, being at the money. So not much reason to roll any earlier. So, what did I do? So on Thursday, SPY was trading around 449, and you can see our option was trading around 9, right? Depending like when exactly I got the screenshot. so, so anyhow, so it was trading around 9, and I want to roll it to a later week, higher strike price, and still get some positive premium, right? So you can see that if I roll just 1 week later, to 21st of July, uh, I would get, well, maybe here it's not even a positive because the mid is below the mid here, but I could only go to 441. And 2 weeks later, if I want to get positive credit for the roll, I could go to 442. That's all. But I really, really want to go to 449 or at least close to it. So you can see as we go along, 4th of August, I can go to 443. 11th of August expiration, I could go to 445. It's, I'm getting closer and closer to 449, but not quite there. This was 18th of August. So in the end, I actually decided to go with September 1st. And you can see, so, the SPY moved a little bit, but it's still, the option is trading a little over 9. So say 910 is the strike, is the price of the option, and here I can get 975 or something, so 65 cents for the roll. I could go actually even one higher, but that turned out, the market kind of moved against me a little bit, so that was not feasible. Anyway, so as I said, I decided to roll from July 14th to September 1st, which is actually 7 weeks out, right? And I tried the trade. Well, when I was taking the screenshot, I tried a trade at getting a credit of 67 cents, but you can see it's already the mid is 65, so this was unrealistic. So in the end, I made the first order at 63 cents, trying to get a credit of 63 cents, but that didn't look very good, so I lowered it to 62 cents and let it sit there for like 3-4 minutes, and nothing was happening. So I lowered the credit again to 61 cents and got filled. So I got filled, around 2:40 p.m. Eastern. And so the trade was, so extending the options from July 14 to 7 weeks later, September 1st, extending the strike price by about 2%. And I was able to get some credit out of it. Very little, $60, not much, but it's always better to get credit than have to spend my money on the road. So this actually makes me very uncomfortable, right? I'm extending the trade by 7 weeks, and who knows what's going to happen to SPY in 7 weeks. It could go up quite a bit. But in the worst case, at least, I am delaying the assignment by 7 weeks and getting 2% credit out of it. So if you extrapolate that for the whole year, that would be about, so 7 weeks, let's see, that would be about 14. So 7 weeks, 2%, right? So it would be about 14, 15% a year, which is a pretty good return for SPY. And that's actually quite good return, right? And usually the average SPY return is about 10%. So, there is a good chance that in the 7 weeks, SPY will be somewhere around 449. Like if it's within, say, 1% of 449, say to 455 or something, I'll be happy. If it's above that, then I will have to again figure out some uh, far away roll to keep my trade essentially going. And of course, I will have to monitor the position. Anyway, so I rolled, and here are the old trades. Here is the new trade. All right, so I got, as I said, the credit was about $60. So here are my positions as of Friday. You can see that, I made a trade a little below 449 on Thursday, and Friday, one day later, actually SPY is a little bit higher, say like 30 cents higher than my trade, but the option is already a little below what I obtained for it, right? So I traded in, I think the trade was 961, and already, so I'm making some profit already on the option, even though SPY is higher than my trade. So definitely it was good that I rolled on Thursday, and most likely if I didn't roll, I would have been assigned. So here is the same chart as before. I just added the place or the price where I initiated the roll, and this is the new strike price for the roll. It's expiring September 1st, so somewhere all the way, all the way to the right there. And here is a screenshot of what SPY was doing on Thursday when I made the trade. So I made the trade somewhere here, right? And you can see that after I made the trade, the SPY actually went even higher, and I'm glad I made the trade here. I didn't wait, because if I waited, it would be even more difficult to roll. I would essentially get a smaller credit for the roll. So here are the details of the behavior every week, how, or every day for the last 6 weeks, how SPY behaved. And you can see here, so this is the strike price, right? So I kept the short call at strike price of 440, then I rolled on Thursday to 449, got the extra $60. So the cash that I got from the call so far is this. But you can see, because SPY moved up quite a bit in a day, or in the last few days, you can see how the profit from the covered calls is quickly declining. However, the profit of the account is, still going up, because that's essentially combining. Actually, here, it's combining the profit from the SPY shares and the SPY calls. So overall, the account is still in a good shape. The covered calls, not so much. Now here you can see it on a weekly chart. Again, I was doing quite well up to about here. I would say even the end of May was still good. Even the beginning of June, still good. The covered calls were doing well. But then SPY had one big jump here, right? And that caused kind of reduced profit in covered calls. And another big jump here, right? And that wasn't too bad, but essentially this big jump kind of caused big drop in the profits. So I'll probably stick with the weekly charts from now on. Today I'm still going to show you the daily chart for the last 3 months or so, but it's kind of the same old, same old. You can see overall the account is going up, which is good. So the calls are not hurting yet. They are still adding some, providing some additional value. However, it's very little at this point. So we'll see how SPY behaves over the summer. I am kind of expecting or hoping that it wouldn't go up that much. So, but we'll see. Okay, so what are my plans for the next few weeks? So I'm going on vacation. That was another reason why I'm extending the trade so much. But even if I were not going on vacation, I think the September 1st expiration is actually the right call in this case. I'm hoping that the markets will trade in a range. I will still keep an eye on the calls, especially closer to expiration when the time value is small. I have to make sure that I don't get assigned, right? And essentially, I'm hoping that the markets will not take off. But in case they do, I really have to monitor the position closely. Similarly as last uh, 4 weeks ago, right? I didn't have much choice where to roll the calls. I want to stay kind of at the money at least, preferably out of the money, but that was not possible. Uh, and so next roll most likely will happen somewhere around September 1st. So that's 7 weeks from now. And if there is no roll or nothing happening, I'll probably will do my update also 7 weeks from today. So that's all for today or for this time. Thank you all for watching. As I said, next review will be probably in 7 weeks, so I won't be posting anything because I'm on vacation and stuff. But I hope to see you back in my channel in 7 weeks. So until next time, happy trading.